I'm Tiffany Rodius from the Guyana Revenue Authority. This week, we'll be talking about getting a work permit compliance letter as a non-resident, how the tax system works for foreigners working and earning income in Guyana, and more. Focus on GRA begins now. Welcome to Focus on GRA, a program of information for taxpayer education. Recently, President Dr. Mohammed Irfan Ali revealed there has been a sharp increase in the demand for a Guyanese passport. With thousands of persons visiting Guyana for business and other opportunities, the GRA takes this time to provide enlightenment about the requirements of non-residents working and earning income in Guyana. Foremost among them is getting a work permit. Here's more. If you are a foreigner who plans to work in Guyana, you are required by law to obtain a work permit or employment visa before you can begin working. A work permit is a legal document that gives non-nationals approval to work in the country. The issuance of work permits falls under the remit of the Ministry of Home Affairs. Part of the application process includes obtaining a work permit letter from the GRA. Natalie Moore, Manager of Miscellaneous Taxes, explains how to apply for a work permit letter.
You would use the compliance application form. You are required to come to our office with your original passport for verification and the stamped pages of your passport. Okay, the passport will be verified and returned to you immediately. You will also come with a letter from the Ministry of Home Affairs that advises us that you are applying for a work permit or extension of stay.
After you are issued with a work permit letter from the GRA, you can then complete the application process for a work permit with the Ministry of Home Affairs. It is important to note that non-nationals also need to apply for a taxpayer identification number, or TIN, to do business in Guyana. Supervisor of Tax Operations and Services, Dolet Goring, explains how to apply for a TIN certificate as a non-national.
The process for persons that are non-Guyanese working in Guyana, usually they are required to have a work permit. The same application form is required if they're going to apply for TIN, a copy of their passport, and we would not require them to have a proof of address. We would allow the company that they're working with to stamp the form, and that would suffice. Once you're a non-national, you're required to have a work permit.
Anyone conducting business with the bank, a public corporation or government departments, or public authorities are required to register with the GRA for a taxpayer identification number. Application forms for the work permit letter and TIN certificate can be found on the GRA's website, www.gra.gov.gy. Are non-residents or foreigners subject to income tax on money earned in Guyana? The answer is yes. Income tax for non-residents is levied and paid at rates specified in the Income Tax Act, Chapter 8101.
An individual or company may be required to pay a tax called withholding tax. But what is withholding tax and who is required to pay this type of tax? Here to inform us about this tax is Ms. Narisha Bobsemple.
Withholding tax is a form of taxation within not only our income tax legislation, but within our corporation tax legislation. It's basically tax that is levied on, it could be resident persons or non-resident persons. It all depends on what is the payment or the distribution that is being levied on.
Withholding tax is a tax charged on a distribution or a payment. A distribution includes dividend paid by a company or distribution of an asset of a company in respect of shares of a company. On the other hand, payment includes rental, interest, management or technical fees, and royalties. An important aspect of this tax is that it must be computed on the gross amount.
If withholding tax is being deducted, it's always on the gross payment or the gross distribution. It's never on the net amount. So a company, a non-resident company or a person, individual, they're not allowed any deductions or any expenses whatsoever when we're computing our withholding taxes. So the person who's withholding must deduct whatever is the prevailing rate. Generally, it's 20%. And they are to withhold that on the gross amount and then pay that over to the Guyana Revenue Authority within 30 days of making that deduction.
So, if a Canadian company provided technical work to a company in Guyana for a sum of $10 million, the Guyana company will be required to deduct 20% of that amount and remit it to the Guyana Revenue Authority. The balance must be paid to the Canadian company. It is important that persons are aware that withholding tax must be paid by the payer of the income rather than by the recipient of the income. In this case, the payer acts as an agent for the Guyana Revenue Authority and must remit the tax along with a withholding tax form specifying the nature of the payment, the amount paid, and the amount withheld. The tax withheld is the income tax of the person or company receiving the payment and not a tax on the person or company making the payment and withholding the tax. Further, the person making the withholding tax payment is required to issue to the recipient a statement or certificate showing the gross amount of the payment, the amount of tax withheld, and the amount actually paid. It is the responsibility of the recipient to ensure that they receive this statement. While the standard rate of withholding tax is 20%, the United Kingdom and North Ireland, along with Canada and CARICOM countries, which all have a double taxation treaty with Guyana, are subject to withholding tax at the rate of 10 or 15% depending on the payment made. Thus, individuals or companies must ensure that they deduct the correct percentage of withholding tax where payment or distribution are made. Additionally, Section 10B of the Corporation Tax Act, Chapter 80103, outlines that where a resident company has a contract arrangement with a non-resident company for a contract undertaken, withholding tax will also be applicable, but at the rate of 10%. Moreover, Section 10B8 of the Corporation Tax Act defines a contract undertaking as the supply of goods or services or the undertaking of any work for a reward under or pursuant to any contract entered into between two or more parties. Ms. Bob Semple explains how this section should be applied.
Take, for instance, it's a resident company that has engaged a non-resident company for repair maintenance of their vessel. And that repair and maintenance is being done within Guyana by that non-resident company, then we will apply 10B. What is happening in this case and why is it called why is it withholding tax being applied in this instance is because if a company, that same company who has engaged the Guyana company has decided to become registered here in Guyana, then that company can claim that 10% that was deducted from their gross payment as part of their advanced taxes. So the expectation is that the non-resident company is not just a one-off job. If it's a one-off job and there's a contractual undertaking, then we expect that 10% only will be deducted. However, should that non-resident company decides, listen, I'm getting more business within Guyana for repairs and maintenance to boat, so I want to set up shop here in Guyana. Therefore, that non-resident company can now, if they do so within the particular year, and I do think they have a certain amount of timeline in which they can actually claim that 10% as well. So once they become registered here in Guyana, what will happen is that they can claim it's a credit. 10% has now become a credit to them, and it's not just a final tax to that non-resident company.
The GRA wishes to inform taxpayers that the withholding tax form is available on the GRA's website. Taxpayers must ensure that the form is accurately completed, submitted, and payment made before the stipulated due date to avoid the payment of penalties.
Do you know that the final tax on income from mining of gold has been reduced? Gold declared by an individual and valued by the central authority will be subject to withholding tax of 2% of gross proceeds for every value under US $1,100 and 2.5% of gross proceeds from gold valued above US $1,100. This measure took effect from June 1, 2022 following an amendment to the Income Tax Act. The amendment also makes provision for the said tax to be collected by the central authority, aggregated and remitted to the Commissioner General on or before the 14th of the new month following the month in which any payment and distribution were made. For more information, contact GRA's Tax Advisory Services section 227-6060 extension 8000. Welcome to Your Question in Focus. This is a segment of our program where we provide answers to some of the frequently asked questions that you've been sending us via email and social media. I have with me Ms. Suzanne Watson from the GRA's Tax Advisory Services section, and she'll be answering questions on the partnership business. Suzanne, welcome to the program. So what do we mean by a partnership?
If you are in a business that consists of two or more persons jointly and agree to share risk, profits, and losses, it is considered as a partnership.
Okay, great. And do partnerships have to register with the Guyana Revenue Authority?
Yes, they must register with the Guyana Revenue Authority for tax purposes.
So what documents are required?
They have to submit the following documents: completed application form, certificate of registration indicating who the partners are, copy of national identification card or a valid passport for the partners. Additionally, taxpayers' identification numbers, which is a TIN for each individual partner, must be provided. A partnership TIN will be issued to the partners.
And another very important question, how do partnerships go about filing tax returns?
Section 66A of the Income Tax Act, Chapter 8101, stipulates that where a trade, business, profession, or vocation is carried on by two or more persons jointly, the income incurred shall be shared among the partners. Hence, this must be accounted for in the return made by each partner. The return must report the income, deduction, gains, losses from its operations, but it does not pay income tax. Instead, it passes any losses or profit to its partners.
So then, how do they compute the partnership income for tax purposes?
The partnership income must be computed and then allocated among each partner for assessment purposes in accordance with the terms of the partnership agreement in existence in the year of income. Thereafter, the income of any partner derived from a partnership must be included in his or her personal income tax return and assessed upon the individual as part of their chargeable income. The partnership TIN is used for the purpose of filing of the PAYE, withholding tax, and VAT if the partners are registered for VAT.
So what happens if let's say the precedent partner, who happens to be the first person's name in the partnership agreement, if that person is not in Guyana when the income tax is due, what happens under those circumstances?
If the precedent partner is not in Guyana at the time, he or she is required to appoint an attorney, agent, manager, or factor of the firm who is resident in Guyana to file a return on his or her behalf.
There you have it, Suzanne Watson talking about the partnership business and all the details that are involved. If you have other questions on this topic or you have some clarifications, you can always contact Suzanne and her team in the Tax Advisory Services section at the numbers listed at the end of our program.
And that is all for this week's Focus on GRA. For more information, visit our website, gra.gov.gy, or you can send us your inquiries via email at grapublicrelations@gmail.com. Don't forget to follow us on our social media pages for up-to-date tax-related information. Thank you for watching. I'm Tiffany Rodias.